The market's crashing. What's everyone talking about? I just got a buy signal that was triggered on one of my indicators, and I'm going to share that with you in today's episode. If you watched yesterday's video, you understood to the point that volatility was still here and not to go FOMO chasing into these tech stocks. Did they sell off? Yes, they sold off. Did they sell off harder than expected? They sold off way harder than expected, but at least we were prepared. We got a lot to talk about on today's episode. Let's get into it. Welcome back, everybody. We are looking at the heat map of the S&P 500. What is something that you all notice? Well, take a look at the big red section on your screen. That is all the big tech and consumer discretionary there, Amazon, Tesla. Okay, what happens when these take a big hit, when they're bright red? Well, the overall market, it really does struggle. Even despite we saw some green in financials, which we talked about yesterday, and energy as well. We'll get into that. Now, what's so interesting here is we had a lot of green stocks, like stocks that were in the green, all right? Actually, more so than stocks that were in the red. We actually had 269 advancing stocks in the S&P 500, 231 declining. But when you really take a look at capital flow, 4 times the capital was on the declining stocks than advancing. So it just goes to show you how powerful mega cap stocks are. What are the mega cap stocks? The FANG man stocks, right? Microsoft, Apple, Google, Nvidia, Tesla, Amazon. When those things sell off and they sell off hard, guess what happens? The market struggles. It's as simple as that. And guess what also? If these were in the green, it would have been a treacherous day overall. If we take a look at the 11 sectors in the S&P 500, those ones right over there. Consumer discretionary tech at the bottom, down 2.83%. Make no mistake, that is a large move to the downside. The highest performer was financials, 1.26, which we talked about in yesterday's video. And also energy there was doing pretty good, but materials and consumer staples, so, interesting. It's a little bit of a mixed bag right here. We had the yield curve, right? I'm going to go to the yield curve right now. Actually, I'll just show you this. Yield curve steepened slightly, okay? A little bit of an uptick. The 10-year was down, but the yield curve steepened. Financials like that, obviously, and tech really did not. And this is all coming after the FOMC announcement. A lot of people are getting shucken up. Which way to go? This is why we say let the market digest this type of information. If we take a look at this side of the screen, we have the Dow, S&P 500, NASDAQ 100. Just look at this. The NASDAQ composite down 2.47%. Volatility, people. Volatility is here. NASDAQ 100 down 2.61%. And I'll tell you what, if you even look at a chart of like Microsoft, which we talked about yesterday, and Google, like these big cap names, Nvidia, etc., I mean, they're minus Nvidia, but Google, Microsoft, we haven't really seen much sell-side activity at all. And now we're starting to see it, and it just goes to show you how powerful these can actually put weight on a market to the downside. Okie dokie. But there's some good news. There's a silver lining in all of this, all right? Because this type of move today, it scared a lot of people. It really did. But you should be prepared for these moves, which we were. And now we got to make sure that we're keying in on opportunities. Can it sell off more? Can the market crash? Yeah. But let's get into this, okay? Let's look at the S&P 500. This was yesterday's chart. This was the range that the options market was pricing in. Look at what happened. We got that gap up. We said, hey, be careful on the gap ups, especially in these various stocks, because it can go into more oversold territory after that big authoritative candle, jogging your memory here, and we reversed action and sold off. And where did we land? Right at the lower edge of that expected move, tapped into the previous high of the last trading day's candle and the 20-period moving average, and we bounced from that area. Funny story. If you're in the Discord, I posted a setup on a smaller time frame of the S&P 500 to go long right here at this level, and it was from a capitulation candle, which means it was a very strong to the downside candle after a down move and then a big uptick in volume. Basically, that could signal a capitulation where we start to see a move up. Okay, and if I was reading the tape and there was also a big sell order that was filled very quickly of like 1.3 million shares on the SPY. So it was a good entry, but I shorted into it, meaning to fade. And that was my biggest mistake of the day. That was the only trade I took today. I was so patient. I took the trade, but I took it from the wrong perspective. And then I got out right away, and I said, screw it. I'm done for the day. So I got obliterated. Not really obliterated. It was it was pretty controlled, but still. All right, still. Sucks. People make mistakes. Oh my gosh. All right, let's move on. Let's look at what the expected move is now. Look at the S&P 500 is still pricing in a $43 expected move, and we have one more trading day left. That means that we can go right back up to previously the all-time highs, or we could come back down to just above the 50-day moving average. Both are, from a price action perspective, it literally can go either way right here. You can see that the market has been trading within this range, and now it's basically saying, hey, there's a 68% chance that we're going to close within this come tomorrow, okay? Nothing crazy right there. And we have OPEX, option expirations. We had the VIX kind of shoot up a little bit, and now it's kind of coming down. I don't have a chart of the VIX, unfortunately, but it looks like a bear flag on the 30-minute time frame, so that's something to watch out for. But just note those key levels, 46.25 and then 47.11, which, by the way, that 11 number, I wouldn't be surprised if we came right up and just sat right on 47.11, because for some reason those have been acting like handles, or 46.11. Like if it even came down here, like even see here, right? These two candles right here came right down to around that range. So it's been a weird magnet overall. All right, let's continue on. The Qs, that was where the kind of just monster sell-off took place. It was the NASDAQ 100, right? Mega cap stocks. This is a pretty darn bearish candle, but I want to point something out that no one's going to be talking about. Everyone's going to be talking about the volatility and the craziness in the market today. But one thing that people haven't talked about, I'll mention here soon. First off, that means you got to hold on. First off, big authoritative candle to the downside. Typically on moves like that, we can get, like I said, range days or, inside trading candles the very next day. We'll see. This is a big, gapped up, engulfed the entire body of the last day. More volume came in. But on a good note, we have a low and a higher low, and we had a high and a higher high right here. And now the market is still pricing in almost a $6 expected move. So 87, come up to around this range, right back into this area where there was, resistance, support. So it could come right back up into there, or we can drop obviously a little bit lower into around this range here too as well. And you can see here that still wouldn't quite take out these lows over here, and it would still be above that 100-day moving average. So there's a lot of volatility here, so be careful. If we take a look at the 15-minute time frame, this is that round trip, right? This looked like a lot of tech stocks from the announcement. We got that big burst up. What happened? RSI got very overextended. What happened even past that? We gapped up, said be careful. We sold off. Did we think that we're going to sell off this much? I don't know. Some people probably did. I didn't think that we were going to sell off that much, but we did, and it kept on continuing to perpetuate itself to the downside throughout the rest of the trading day, closing back below that 5-day moving average. If you really zone in on what really hurt the composite, it's semiconductors. Semiconductors got completely obliterated. That is a bearish engulfing candle right there. Very authoritative to the downside. Right back in, though, into this trading range. It has been in this trading range. It has not broken out of it, except for maybe right here, but we can actually bring it down here, and then we can actually make this go up. So, you have resistance up here, and then you have support down there. So even if it comes down more, we're still technically within that range, and it's chopping around sideways. Until we get a decisive close beneath this is when we really start to have to worry. This candle, though, that's a pretty nasty looking candle overall. All right, let's continue on. NVIDIA looks just like, obviously, the SMH here. And NVIDIA, we had that gap up. And this one obviously has a high implied volatility. And this one can really unwind the market. It's down 6.8%. That puts pressure. It's one of the largest mega cap stocks in the S&P 500. So when this struggles like this, well, you see various other ones start to unwind too. PPO is still trending down here, but it is above zero. And we're still above that 50-day moving average. What else to notice? A high, higher high, a low, and a higher low. So interesting, right? Scary day. But what are you starting to notice? I'll tell you right now. S&P 500. Let me go back. S&P 500. Right? Don't be surprised about today's down day, right? We knew about that. The options market told us. But we have a high and a lower high compared to the previous trading day candle. So that's interesting. That's not necessarily bearish. All right? If we take a look at the NASDAQ 100, the Qs, we had a higher high and a higher low there too as well. Can this change tomorrow? Yes, but I'm trying to point this out right now. We showed NVIDIA. Let's look at IWM. IWM, also bearish, almost bearish engulfing, full of candle that engulfed the entire body of the previous trading day. But take note, a high and a higher low, right, compared to the previous trading day. So higher high, higher low right there. And we're on a positive divergence right here at the lower end range. Can we go lower? Can we crack down through this level? Yes, obviously, okay? But what I'm trying to point out here are some things that maybe from a bullish perspective or even from a bearish perspective, people aren't paying quite attention to. If we look at the Dow Jones Industrial Average, this one had the more relative strength today. This one only finished down 0.08%, so relatively flat, and it had a higher low and a higher high as well. It didn't close higher, but it did have those higher ranges that it's above those key moving averages. Now, like I said earlier, all of a sudden I got this buy signal. What's this buy signal? It's not like the Holy Grail, ladies and gentlemen. Okay, there's no such thing as a Holy Grail, but let me show you something. Okay, I posted this on Twitter earlier. It doesn't trigger often, and I use this as a sell signal too, so you might know what I'm talking about, the people that have been around. It's triggered 6 buy signals in the last year and a half or so. And these blue lines are each time it triggered, right? So it triggered here, we moved up, triggered here, we moved up, triggered here, we kind of shot up, sold off, triggered again, sold up, and then sold off, and then really ripped. Here, well, it missed this rip, but then it got right here and got a little bit more of a rip. This one it tagged really well, and it got this monster rip, and now we just got another buy signal. Let's look into what I'm talking about. We are looking at the CPC, the put to call ratio, and we smoothed it over with the 10 period moving average. This might look familiar, but I used TradingView because TradingView updated it earlier than the stockcharts.com platform that I like to use. Okay, so the first thing is first, these blue horizontal lines, or sorry, vertical lines. So this one, this one, this one, this one, those are the 1, 2, 3, 4, 5 signals that were triggered on the previous screen. So if I look at this screen, you will see those signals on the chart. All right, there we go. Wait, did I get that right? October, December, yeah, okay, I got that right. And what I'm calling out here is when the 10 period moving average goes above the green line and then crosses from above to below, that triggers that buy signal, okay? And what we're seeing right now, we saw a big move to the downside in the CPC. You can't see it that great because it's the opacity is turned down, but it came from up there to down here today. And that dragged that 10 period moving average below or right about that 0.95, which produces a buy signal. Now it closed on 0.95. Typically you say it's a buy signal when it crosses below it, but you know, pretty darn close enough, especially with this down here. I'm sure that that would actually sink down going into tomorrow. Okay, this is also used as a sell signal. When it crosses below 0.8 and then crosses above it, that's a sell signal, and it's nailed it here, here, here. It's nailed it a bunch of times, and this has been a very accurate reading for the most part, even with sell signals. So I don't always use this as a buy signal, but I wanted to point it out, even despite a crazy price action, weird trading day, you know, you're seeing this take place. And if we look at the S&P 500 once again, just take a look, okay? The S&P 500, very nasty looking candle, gapped up. They call this dark cloud coverage, right? But it's really just in a trading range. But on a positive note, we're above the 20, above the 50, above the 100, above the 200. So it's still in an uptrend, okay? And the market's still pricing volatility. But this does remind me of typical times, like, for example, the last buy signal, it was triggered right here in October. And what was happening right there coming into October? Well, we saw, you know, a big sell-off, boom, and everyone was scared. Then we saw a rally and then a sell-off again, and everyone was like, oh, dude, it's over. This is where it's happening. Evergrande's crashing the market. And then all of a sudden, we came up and then ripped up even higher. Is that going to happen? Dude, I don't know. But I'm just pointing this out. Another thing to call out is sentiment. Oh, no. Did I bring out the right chart? Oh, yeah, here we are. Sentiment. All right, so let's take a look at this chart. This is the asset managers. What are they doing? Well, this is actually a good indicator here too as well. When it gets above 100, you want to look at this as a contrarian indicator that's saying, okay, maybe pause a little bit, be careful. And we talked about it. We're on multiple weeks above 100, and then we're starting to see that turbulence, and then we saw the sell-off, okay? And now it's getting to around 50. Now, I like to see this at a 50 reading or lower, and that has acted as actually a pretty decent buy signal. So we're kind of falling within that region. Now, what do I mean? Well, we've seen it right around these areas and right here and right there. If we look up, bam, we saw a little bit of a rally, right? And then it came back down, and then we rallied higher. We saw it right here, boom, and that was right here on these 2 nasty weeks, and then we started rallying higher there as well. So you can use this as a contrarian indicator. It hasn't reached down below 50, right? And it could go lower, right? We've seen a market crash. That was through the pandemic, right? But just so you know, and just so you see it visually on a chart, you can see this as a contrarian indicator. All right, everybody, that's all I have for you on today's episode. Look, I just wanted to offer an alternative view because I know a lot of people are fearing right now, and they're trying to probably either one, sell into this big, huge dip and all these crazy scare stuff. And, rightfully so. It was a very scary day in the markets. Tomorrow's Friday. We're coming into the, final period of the holiday season. Don't do anything crazy. It's all about capital preservation and growth. And you got to do this over the long course of time. So don't make any crazy moves. But like I said, I wanted to offer up just a little bit different picture that maybe some people might not be looking at. That's all I got for you on today's episode, everybody. Have a wonderful night.